Okay, so I'm gonna do this. I think it will be kind of useful to see this done in the accounting software. Okay, so it's called Wave. It's like free. So if you guys ever wanted to mess around with this, you can download it. But I've kind of already started a fake business. Okay, I already have one transaction here where I receive cash for common stock. So you can say this is the first transaction of the company. Okay, so now let's see what happens as I do different transactions. So on October 4th, I purchased office equipment for $10,000 on account from Office Depot. Okay, so what accounts are going to be involved here? Let's just kind of do the brain work ahead of time, and then I'll show you how to do the entry in the software. Okay, office equipment. What else? Okay, so on account. See, I didn't pay cash for this. So what account is this? What have we been calling this when you buy something on credit? Right? Accounts payable. Everyone agree? Okay, so those are my two accounts, office equipment and accounts payable. Is office equipment going up or down? Am I buying or am I selling office equipment? Buying. So office equipment is going up. It's an asset. So is that going to be a debit or a credit? Okay, so good. We have debit office equipment. I'm just going to call it OE 10,000. Okay. What about accounts payable? What kind of account is that? It's a asset, liability, revenue, expense. It's a liability. Good. And is it going up or down? It's up, right? Because I now owe Office Depot 10,000. It's a new liability that just got created. So that's gonna be a credit. Okay. So if I go to my software, if I go to add transaction, there's different ways to do it. Okay. The modern accounting software, they're like integrated with your bank account, right? They'll download all the bank account transactions that you have. So if it's coming from your bank account, what is definitely one account involved in every transaction in your bank account? I heard it kind of whispered, but say it with some confidence. What is your bank account? What is that? What kind of asset is that? Cash, right? So if this software is downloading all your accounts from your bank account, at least one of the accounts is cash, because that's where all that data is coming from your cash transactions, right? And then you would go and like sort it and say, hey, that $10,000 cash was to buy office equipment, right? So in this case, I'm going to do a journal entry, right? Because I'm just going to do it from like without any data feed. Okay. So what account? Okay. So first, it's like, I guess I said it was October something. So let's just make the October 5th. What was our account date? October 4th. Okay. So I'm going to put the date, October 4th. I'm going to let's see if I have an office supplies. Let's see if I have an equipment. Equipment. Okay. So I'm just going to use it. I'm not going to call it office equipment. I'm just going to put equipment. We said it's a debit, 10,000. And then we had accounts payable, right? So you can see here the drop down is telling me it's like kind of listing it by type. So I can see liabilities, accounts payable. Okay, so now it's going to let me do this because my debits and my credits are equal, and the accounting software knows that that's like the cardinal rule. Okay, so I can go save. Okay, so now let's see. So now you can see it appeared here. It says category journal entry 10,000. So if I go to look at my balances for my accounts, okay, account balances, you can see that I now have two assets, cash. That's from that first issuance of stock. I have $10 million in cash. And now I have equipment, debit balance, 10,000. So this is my total assets. Accounts payable, I have a credit now, 10,000. And then common stock, credit balance, 10 million. Okay, so that journal entry updated the balances for these two accounts. Yeah, okay, so this is a little better view. This is more akin to our T accounts, okay? Um, you can see here I have to keep altering the dates because it keeps wanting to just do the month of. So this is kind of like the T accounts for everything, right? Cash, debit, 10 million, and the balance is just a 10 million balance. Equipment, debit balance, accounts payable, credit balance, common stock, credit balance. Okay, but you can see that it all balances. Okay, so this is a little preview of a different report that we have called a trial balance. You can see that the debit total, 10 million, 10,000, is equal to the credit total. Okay, so this is going to always, we saw in chapter 1, that very tedious problem. The balance is always going to be maintained. Okay, okay, so let's do the next transaction. So performed consulting services for a client and received $4,000 cash. So what accounts are involved here? Okay, I heard it. Whisper it. Who wants to raise their hand and tell me the two accounts involved? Yeah, Chris.
Would it be cash and
Yes. Cash, $4,000 cash you received. Cash is an asset. It's going up. So what is that? A debit or a credit? Debit, right. So we know we're going to debit cash 4,000. And Chris said service revenue. We're earning revenue. Is that a credit normal or a debit normal account? Credit normal, right? Let's go back. Let me just make sure we're all seeing where that's coming from. It's from this accounting equation. Okay? Right? Revenue is on this credit side. So that means when it goes up, we credit it. Okay? Everyone good with that? So debit cash 4,000, credit service revenue 4,000. Agreed? That's our journal entry? Okay, so let's do that. So I'm going to go back to transactions. I'm going to add another journal entry. I'm going to say cash 4,000 debit, and then service revenue. So it's calling this income, okay? It's an income account. That's what this software is calling it, but it's a revenue, income, same kind of, same terminology, okay? And this is going to be 4,000. Again, now that my credits and my debits are equal, it's going to allow me to save this because it's and then let's make sure the date. I think it was October 8th. Okay, so now I'll save this. Okay, so you can see now this transaction ledger is keeping track of all the transactions. So this journal entry 4,000 is going to appear here. And yeah, I could write, service revenue, or and you can maybe say your client name, client X. Okay. Um, okay, so now let's see that appear in the balances. Okay, so you can now see under service revenue, we now have a credit balance here, 4,000, and the cash balance went up too, right? We got this 4,000 in cash that came in. So it's automatically posting it, right? We talked about this idea of posting where we have the journal entry and then it goes and it updates the balances, right? It kind of puts the debit or credit in the right spot in the account. So this software is automatically posting it, okay? That's why you won't actually have to ever deal with T accounts. The software is managing the T account for you. But you need to understand the link between the journal entry and how that account balance gets updated, okay? Okay, let's do another one, okay? Paid $1,500. Let's skip that one because that's just another cash. Okay, what about this one? October 20th. We paid $5,000 cash towards the equipment we purchased on the 4th. That we remember we bought that on account, right? Okay, so what are the accounts involved? Okay, so is cash going up or down? Down, right? That cash is leaving our business. We're paying off this payable. So is that a debit or a credit? Good, yes. So cash is going to get credited. So we know that we're going to debit something, right? So does it make sense to debit accounts payable? Is that right? Okay, why is it right? I agree with you. Yeah, right? You owed that money, but now you're paying it off, right? So you owe less money to that person. So yes, it makes sense that that liability accounts payable is going to go down. So you should debit it. Okay, so we just figured it out. This is our journal entry. Uh, Debit accounts payable, 4,000 or 5,000, credit cash. Okay, so let's do that journal entry, and it's on October 20th. So go back, transactions. So I said accounts payable, 5,000. You notice we're not paying off the whole thing, right? I think it was 10,000, right? So we're paying off half of it. We're on like a little payment plan. Okay. So we're going to pay off half of it. Okay. So I'm going to save this. Let's go back and see what happened. Okay. So you can see here now, like, let's look at our cash T account essentially. Okay. We have two debits, 10,000 or sorry, 10 million from the issuance of the stock, that first transaction. Service revenue, we got cash from that client. And then this 5,000 is a credit, right? It's a reduction in cash, right? So it's giving us the balance here, right? It's not telling us. This software is a little, it could be a little more clear by telling us that this is a debit balance, but it is a debit balance, okay? And then equipment, we have our 10,000. And if we look at accounts payable now, we started with this $10,000 credit. We just debited it, right? So this $5,000 debit and this $5,000 credit are from the same transaction, but they've now kind of been split into their respective accounts. Okay, and they're linked together. You can see the date is the same, right? October 20th, October 20th. So you looking through the T account can figure out what the full journal entry was. Okay, so yeah, the balance here is 5,000. Again, it could be more clear. It's a credit balance. But it's coming from this credit and this debit. Okay, this system is like, it's tight. It's a tight system. Okay, this, in the end, you can do 1,000,000 transactions. And in the end, this will still have your balance sheet balance if you just keep doing it the way that we're doing it, even if it's 1,000,000 transactions. So the symmetry of this, it's a very elegant system. Okay. Um, But you have to do it right. You have to make sure you have two accounts involved, that your assets are debited when you increase them, credited when you decrease them. So you have to know the system in order for this to work. Okay. But if you do know the rules and you apply them consistently, your books will always balance.